All right, so anyone can become a financial advisor. All you have to do is pass a test. I mean, come on, if I can pass. Now, basically, financial advisors are just paid to sell products. Not all of them, but a good chunk of them. And some of them don't even really know how the markets work. They're just really good salespeople. Now, if you ever personally meet with one of these financial advisors, one way that you could tell that they really have no clue is the formula that they use to tell you your diversification between stocks and bonds. Now, on this financial advisor test, what they teach is you take 100 and you subtract it from the client's age, and whatever that number is the percentage that they should have in stocks. For example, if you're 60 years old, 100 minus 60 is 40, and that means that a 60-year-old should have no more than 40% of their portfolio in stocks. If you were 30 years old, you could see how you would have 70% stocks, 30% bonds. That would be the rough breakdown. I kid you not. That's the formula that they teach. That's what the industry has come up with as a general rule for what you should have in your portfolio. It's ridiculous. This process to me is absolutely ridiculous. We're taking someone's money and we're just arbitrarily saying 100 minus however old you are, and that's what kind of products you should be in. Everyone is a little bit different and everyone has different risk tolerances. Also, the markets could be in any possible position. Let's give you an example. Right now, the markets are at all-time highs. Every single day, as we speak, they're making all-time highs again. Now, the markets have been up for 9 years straight. If you ran up a hill for 9 years, don't you think you'd take a break at some time? Even just a little break? If you saw the price of shirts going up for 9 years in a row, would you chase that? Would you say, well, fine, I guess I have to pay all this money for shirts? No. So if you're 50 years old and you still have some time until you retire, why would you want 50% of your portfolio in the market, in stocks, individual stocks, just because someone came up with 100 minus your age is 50. Now, we could be on the other end of the spectrum too. Maybe in a few years the markets pull back. I don't know how much, but maybe they pull back and things are on sale. Well, if you're 60 years old and you have a good chunk of retirement saved up, why would you only want 40% invested in things that are on sale? Wouldn't you want to buy more stuff that's on sale? So you can see how every individual person has a different need, a different risk tolerance, and we always want to take into consideration what the market's doing. The reason most financial advisors don't take into consideration what the markets do is because they're not taught that. They have no idea where the market is or how to even use it. I've spent the last 10 years investing in the market for my income, for my main source of my family's income. So I know how to tell when the market's expensive, like it kind of is right now, or when retail stocks are cheap, or when oil might be cheap. That's what I do. Our clients we meet with, not for hours, we just simple chat. Hey, what do you have? You got some stocks in your portfolio that you like, that you don't like? Give me an example of a position that you don't like. Give me an example of positions you wish you had, and we could come up with a nice mix of what's right for you. All right, hey, on YouTube, we have plenty of other videos that are just like this, or you could go to our website, jazzwealth.com. If you'd like to work with us, of course, you can always leave a comment, send me an email, or you can contact me anytime directly at